Welcome to the Bitcoin Business Podcast put on by Sovereign. I'm your host, Brandon Karpeles. Today, I have with me a very special guest. I'm sure everyone listening to this podcast knows him. For those of you that don't, his name's Matt Odell. He does about 8 million things in the Bitcoin space. He's got a Citadel Dispatch poster behind him, which is his personal podcast. He does a podcast with Marty Bent called Rabbit Hole Recap. And the main reason I have Matt on today, other than the fact that he's a legend in this space, is he's a partner at a firm called 1031, which is a venture capital firm. He officially branded himself a suit by joining them. He's donning the suit hat in accordance with his new principles. But 1031, for folks that don't know, funds Bitcoin only businesses or Bitcoin adjacent businesses in the space. And so, welcome, Matt. First of all, thanks for coming on. I greatly appreciate it. I know your time is the only thing more scarce than Bitcoin, and it's an honor to have you on.
Thank you for having me, sir. It's a pleasure.
Yeah, so as we sort of drill down on the business side of things in line with this podcast, as someone at 1031, when people are coming to you and asking for funding or other investors, that sort of thing, what's kind of the analysis that goes into whether or not people are looking for VC money? And then your guys' decision, does this need to actually outperform Bitcoin? Or are we just trying to help the ecosystem as opposed to the person coming to you saying, maybe it would be better to bootstrap this? Let's just get a SATS flow positive business and try to do it that way. If you could talk about some of the factors that maybe go into that.
I mean, good question. I think probably the most important question. I think there's another piece there too, which is there's been a tendency in the Bitcoin space specifically, where a lot of investment hasn't been based on any kind of fundamentals or underwriting. Um, and 1031 is not a charity operation. Like I literally run my own charity where I get paid nothing for, called OpenSats. Um, and important open source projects that are key for the flourishing of the Bitcoin ecosystem should apply for grants there. But ultimately, at the end of the day, if 1031 is going to invest, there has to be a strong business case, and there needs to be a strong possibility of profitability. And specifically, when we talk about that, we talk about it in terms of Bitcoin cash flow. We call that SATS flow. Um, so when we're underwriting a deal and deciding whether or not it's investable, the number one thing is, what is the business opportunity? What is the addressable market? Is this just a hype thing, or is this actually something people will use at scale? How profitable can it be? And then also, we are looking at the investor, right? We go from early stage all the way to, we led the Strike Series B, which was an $80 million round. So we spread the gamut. But when you're talking about early stage in general, and I mean, even Strike Series B, in a lot of ways, it has early stage tendencies. You're very much investing in the founding team and their ability to execute. Bitcoin itself is a long grind. I think building successful businesses on Bitcoin is a very long grind. And a lot of times it does come down to the individual founder. And then in terms of, do you bootstrap this thing or do you try and raise outside capital? I think generally speaking, uh, probably always best to bootstrap at first if you can. If you can bootstrap at first, stay extremely lean, prove out the product, release an MVP. You can always take investable capital afterwards. And if it's an open source project, you could actually, during that bootstrap phase, also take grant money, whether that's from OpenSats or HRF or others, and then that's non-dilutive. Prove out the product. And why do I say that? Because even if it ultimately is investable, um, as a founder, you'll get better terms if you've actually proven out the product on the market. Like if you're coming, first of all, if you're coming with just an idea, Bitcoin capital is really scarce. Like there's not we're competing against the crypto guys that are, putting in, they have billion-dollar funds. 1031 has deployed $200 million. We're by far the largest in the Bitcoin specific area. But A16Z, for instance, they did the Lightspark deal. That was just a $165 million deal just in one deal. So we're kind of a drop in the bucket. So if you are going to raise early, very early, you're not going to get ideal terms. So it's better to bootstrap it in the beginning, no matter what. And then even when it's later and you are taking investable money, um, I think, where we differ a lot from traditional venture is that we expect you to run a very lean operation. We expect you to try and seek profitability early. uh, the top line revenue isn't as important to us as the bottom line net, because at the end of the day, if it takes you 10 years to monetize, what is the purchasing power of Bitcoin at that point? Like a sat earned today is worth like 100 sats were earned in 10 years. I don't pretend to know what the price is going to be, but it's going to be significantly higher if we're correct about all this.
Man, that's such a good point. I in my old job, I handled distressed assets for a financial company, and one of the areas that I was tasked with helping distressed companies was we had a ventures arm in a commercial bank. Don't ask me why we did that. We were a commercial bank. We should have never been doing that. But back when money was free, that was the point. It was just deploy all this capital and then how long to monetize. And no one ever looked at the margins. It was, I remember sitting down with our chief credit officer at the time, and I just looked at him and I go, how are we doing? I go, 80% of these businesses aren't even profitable. How are we deploying capital into this? And he said, honestly, man, I don't understand it either. And I said, I literally don't get it. This was my pre-Bitcoiner stage, and now it's very obvious. It was just, oh, we don't care if it's profitable right now. We just need to deploy the capital. The money's free. They'll
Yep.
monetize later. We'll do the next series, whatever. And now, as I joined Sovereign and am the CEO, I'm looking at all this stuff, realizing how insane all that was. As you said, capital in the Bitcoin space is incredibly scarce. We're doing exactly what you're talking about. Get our expenses down as low as possible and let just even a small amount of revenue overcome those expenses on a monthly basis, because as long as you get your margins in order, then you can scale appropriately. And I'm curious, of the businesses that have come to you guys, did most of them take that sort of path, like try to bootstrap it at first and then go to market, or is it we're just coming straight to market? We need a big VC slug, and we got our plan in order.
So we've been operating for about 5 years. Um, and so in the beginning, like late 2020, early 21, uh, when money was still pretty cheap, right? Like when we're talking about on the macro side, rates were still pretty low, money was flowing. There were more that just came like pre-seed. Um, Now, it's interesting, right? Because the Bitcoiners in general understand living in a hard money environment. But now the rest of the market is kind of being forced into that mindset as well, whether they're Bitcoiners or not, because rates are high, because money's hard to find.
Well,
Um,
rates are higher. I mean,
I know,
5%
I
isn't
know, but they're high
exactly.
for my generation.
Yes.
Um, but my point is like if you plot zero rates on a graph and you plot when A16Z was founded, they were literally founded like 6 months after we hit zero rates. They are a zero rate phenomenon. Like their entire strategy is based on near zero cost of capital. And then you just grow at all costs, you just burn a ton of money, and then you hope to monetize in 15, 20 years and you get a couple big winners, right? And that's how you go. I will say, like, among our successes, and because we focus on Bitcoin, in general, we have, I think, way less zeros, right? Like way less. It's a harder. It's like iron sharpens iron. It's like a harder environment to build in. So as a result, you don't get as many like complete misses. but there's definitely a gradient between our success stories versus our like moderate outcomes. And the success stories are the ones that run a very lean operation in the beginning, that are more or less bootstrapped early on, and then they come for investable capital later. But it just depends on the product, and it depends on how much like how capital intensive it is. We're the largest investor, Anchor Watch. That deal was done on the more recent side, and like they have a Lloyd's of London insurance relationship. It's an incredibly capital intensive business. Like, it's not a business you can bootstrap, right? And then if you counter that with something like CoinKite, they make the cold card. Like, that was a completely bootstrap business between MVK and his partner, and they really didn't even need investable capital. They ended up taking our capital just to throw fuel on the fire, and they liked the alignment, right? They wanted our feedback, our advice, our network. But that's a business, like, they had a small manufacturing line in Canada, and they slowly iterated on the product, and they built out their reputation, and then over time, the scale started to happen. So it really depends on what the business is. I will say that um, there's a lot of hype around like Bitcoin treasury companies, the leverage Bitcoin equities, the MicroStrategy plays, um, but it's really underappreciated. And this is just like this is my Bitcoin hat on, not necessarily a 1031 hat. Like, how much like Bitcoin can just supercharge like your average small business that's like completely unrelated to Bitcoin. To me, I find that fascinating. Like, you're a bootstrapped dentist operation or plumber or something, and you stack Bitcoin with your treasury, and you use it as a capital asset. It's just really a superpower. But we see similar things on the startup side.
I mean, that's exactly the businesses we're trying to focus
Yeah,
on. Just, hey, you're profitable. Um, you should be storing your time and energy in a better money. And then ultimately that will allow you to survive for longer and actually maybe be able to hand this business down to your children or the next
exactly.
generation. And that's what we like to focus on. We actually had someone come to us and ask us to help them become a Bitcoin treasury company, and we kind of declined them. We just said, "Hey, that's not really what we do. You need a proper underwriting team. You need people. There's regulatory stuff you need to do." And at the end of the day, we're not here to play financial alchemy. I listen. The Puro Shard article is probably my favorite Bitcoin article of all time. If not, it's certainly in the top three about the arbitrage that's eventually going to take place, and we all knew this day was going to come. But we have businesses, and MicroStrategy is probably an exception. They're very low leverage compared to what they're putting on, and they probably will be able to stand a downturn. But lots of businesses will not be able to do that. And how you advise someone on what quote unquote responsible leverage is not something I really want to stake my reputation or Sovereign's reputation on. It just opens you up for a world of pain. So
Yeah, I'm right there with you. I will. I do think like the way people should look at it is though it's MicroStrategy and then everyone else, and I think that everyone else are going to have a particularly difficult time. I But on that note, on the previous note, it's interesting because like even if you don't bootstrap, all of the founders we invest in are Bitcoiners. So even if they take like let's use Anchor Watch as an example again. Even if they take investable capital right out of the gate, basically like pre-seed, seed, or whatever. That's kind of artisanal what you call it. Um, their cost of capital is still Bitcoin, right? So it's not like if you give a fiat SF founder that's got like an AI startup, you give him $10 million or something. Like, he's spending like crazy. They just got new office space. Maybe he rents a new, brand new Tesla or something. You give
get
it
that
to a
head count up.
Yeah, you give it to a Bitcoiner, it immediately goes into Bitcoin, and they're counting every single sat that comes out, regardless. So you tend to not have that immediate negative effect of, like, it's almost like lottery winnings. It's like, right, it's like who responsibly handles lottery winnings. I think fiat VC has that issue where we don't have that issue because we only invest in Bitcoiners.
Yeah, that's such a good point. I mean, it's interesting you say that too. Just it this kind of goes back to the I don't want to say character because that's not the right word, but sort of makeup of these people. And that's what we're finding with a lot of these business owners that come to us is they're people that are like, I want to be profitable. I want to save money, but I'm getting destroyed. And I don't really have a good way to take my earnings and protect it into the future. So already you have this alignment on sort of a values front, or at least a financial prudence front, where it's not, hey, I'm coming looking out. I mean, seriously, we haven't had anyone come to us where they're like, hey, I want to get into this trade and then get out. I want to make a few bucks. And it's like, no, I want to store my wealth and my capital for my business into the future. And having that alignment is just such a different alignment than getting into like, how do we get this thing to scale and then sell out and everyone,
Yep.
retire to their island. And it's exciting to see that too, because you're actually investing someone that wants to build something that wants to be productive. And I this in the Bitcoin space, there's this constant battle you have, right, between open source and profitability. It's like raising your kid. Well, am I going to give him some Bitcoin when he's 18? Am I going to make him work? Do I want him to have it easier than I had it, harder than I had it? Do I want him to learn lessons? How hard should those lessons be? And it's like this constant battle that there's no great answer for. And I'm there's a lot of Bitcoiners out there who have almost like an antipathy towards profit, where it's like you're not allowed to be profitable, you're not allowed to make things, but you're not allowed to make money for the things you produce. At the same time, the only reason Bitcoin has any value is because it's a store of time and energy to buy something that someone produced later. And I'm just kind of curious what you think about that, how you balance that. And I'm sure you see this all the time more than anyone, being right in the middle of this sort of balancing act.
Yeah, I mean, I'm very much in the middle of it. I I mean, look, if you go back to why uh, I'm optimistic on Bitcoin and why I've devoted so much of my time to Bitcoin, it's because at its core, the assumption it makes is that every participant will be greedy and seek profit. And that's why it works and that's why it scales. It's very unique in the open source world and the open protocol world where that's the case, where participants are effectively incentivized through market behavior, through making money, to scale the thing, protect the thing, iterate on the thing, and make it more robust. It's fascinating. Like it was very unique in that regard. Um, so on that note, right, there of course there are certain things that can never be monetized. Bitcoin protocol dev, for instance. It is a common good. It's out there for the public. There is no middleman involved. That's a key part of the value prop, and it cannot be monetized. And that's why OpenSats exists, right? Something like Sparrow Wallet, right, is one of those types of projects that's not protocol dev. That is very difficult, if not impossible, to monetize. And if it was monetized, maybe it ruins the actual value prop that it provides. I would use BTC Pay Server as another example. Um, BTC Pay Server has become a fundamental project in the space. And the key is that anyone can run it and you can do it without a middleman involved. Now, with all that said, um, I do think that the way we hit scale and sustainability is by having profitable, sustainable business models on top of open source and alongside open source. And I say that as someone who has spent a lot of time raising charitable money for open source, and it's very difficult. In total, OpenSats right now is deploying about $1 million a month. So that's about $12 million a year into open source dev. We're by far the largest operating in the space. We're unique in that we're privately funded via private donors. Like when USAID went up and got gutted, Tor and all these other projects were freaking out. OpenSats didn't bat an eye. Like we did not need that money. We have our Bitcoin treasury. No one can take it from us. We control our own destiny. But
I
all
did look
that's
for open sats in the USAID, list of recipients, but I
Yeah, I
didn't
mean,
see
we were
anything.
not
So
there. I will say though that if previously I could have, before they got gutted, if I could have taken some of that USAID money and funneled it to Bitcoin devs, like I would 100% do that. I would not have gotten any of the money. But it's important
that
for
would have
us.
literally been the
Yeah,
best
would have
thing
been
on that
ideal.
entire list. Yeah.
Yeah, my point is that it's important to us that we can control our own destiny, right? But even with all that said, $12 million a year, uh, $12 million a year deployed via OpenSats versus $200 million over 5 years through 1031, and it's really like there's a distribution there, right? Which it took us a while to load up. But my point is there's a lot more capital that wants to make money than there is for charitable causes. Period. Now, if you look at something like the internet is an open protocol itself. On top of the internet open protocol, you have email. But what scaled email the most? And it was Gmail. It was a for-profit business. What scaled messaging the most? It was WhatsApp. It was a for-profit business. Now, historically in big tech land, those business models have been pretty predatory against users. They're based usually on the ad model. They're based on vendor lock-in. They surveil their users. They track their users. They sell the data on their users to advertisers. Now, I think with Bitcoin in the equation, you can actually do ethical business models, and I think this is why there's the contrast, right? This is why a lot of people inherently are against for-profit models or uh, or investment of any kind, is because historically with tech investing, it has resulted in these predatory models. And I think it's because first of all, Bitcoin didn't exist, and then um, second of all, it is the harder path. It's the harder path. It's going to be a longer path. But I think ultimately, if you go down that route, you can scale in a bigger way. And I think the way we obsolete like the A16Zs of the world is by getting better returns than them. Like making ideological arguments to potential investors only gets you so far. What really finds you scale is you show the numbers, and the numbers are way better than the competition, and that's how we move this. That's how we move the industry, the tech industry in general. I think towards a better path. And so I will just end this little mini rant, with a few examples within our portfolio. We have mempool.space, fully open source stack. They monetize with a transaction accelerator and with B2B enterprise services. Like they run BitKey's backend, for instance, and charge fees on that. Now, both of those are like value added services that are on top of an open source stack that you can self host yourself easily. You can just use Mempool's entire tech stack and never pay Mempool a dime, and that's fine. But that helps us scale and helps us
Guilty.
iterate the product. Yeah, it's great. But at the same time, there's a sustainable business model there so that we do not have to constantly rely on charitable donation, right? And we can scale this thing up. Now, where is the best place to run mempool? Well, what about your Start9? Start9 is a fully open source stack. You can buy an old computer or use one of your old computers, install Start9 on it, never pay them a dime, run mempool on it, never pay mempool a dime. But Start9 offers pre-built hardware, quality hardware that they have a small margin on, and they offer value-added services, support basically for all the different things that can run on a Start9. So I think that's also another novel open source project that traditional investors would shy away from, right? And it kind of solves our dual mandate. We have at 1031 we have a dual mandate. We have to make our investors profit. We have to make the money. And then second of all, we want to see Bitcoin become more useful as freedom money, more useful as P2P digital cash and savings and everything. And trying to balance both of those mandates is where a lot of the difficulty happens. But I think that's also where the magic happens.
Yeah, so really what you're talking about is value for value, and that if someone's providing a good or service, that there's absolutely nothing wrong with charging for that. You're charging for your time. And so many people have come to view the only way to monetize things via ad sales or via data sales. And not only via ad sales or via data sales, but also not disclosing any of that, being
Yep.
completely opaque about everything that's going on. Like, I almost wouldn't have a problem if Gmail, like every time you send an email, it's just like this data is being sold. Do you, you
Yep.
know, just FYI, like I would at least respect that and be like, okay, well, I get it. I'm the product. It's that, they hide behind the veneer of, oh, we're just some benevolent organization that's like the third most valuable company in the world. And, oh, you use our email for free. No, you don't. So along those lines, what you were just talking about was we need to out earn these guys. Like,
Yeah.
do you think that's possible? Do you think that's something sustainable? Or do you think maybe, hey, as long as we're profitable in Bitcoin, put our savings in Bitcoin, that ultimately the capital that grows in these businesses, that will be what out earns these? Or curious as to your thoughts on that.
Look, I mean, I think if we're entering a hard money world, which the tech world has never been in a hard money world, right? Um,
Yep.
since the internet existed, we've had cheap money. The if we live in a hard money world, all of a sudden margins become incredibly important. The ability to run a lean operation with uh, low capital overhead is incredibly important. And if you build on top of open protocols and open software, you're able to keep your costs very low while being able to scale very high. So we can scale much more efficiently, much cheaper than the centralized competition. Now the problem is in the early days, it is the harder path. It's the harder path, but I think if because you don't have a walled garden, right? Even um, some like Primal, for instance, right? So we're the largest investor in Primal. Like to leave Primal, literally all you have to do is copy paste your NSEC and settings. Like the switching costs for a social app have never been lower. Um, but the result of making that quote unquote trade off, right, of not locking in your users, is that you're able to scale on top of the entire Nostr network and all those servers that are not necessarily being run by you, and leverage all those apps that are not necessarily being run by you and all the users those apps are bringing in. So in the beginning, especially if for most investors, I think it's a difficult thing to underwrite and a difficult thing to value. But I think if a lot of this is unproven, right? We're kind of running on theories here. But I think long term we can hit scales that these other companies can't hit with margins that are higher that these other companies can't compete with, and ultimately have higher returns. Now, the one flip side to all of this is it does mean that it's a forever grind because if you could leave the Google ecosystem with a couple clicks, then that means that you never have that lock in. There's never like the rest period where you're like, okay, I got a billion users, now I'm set. You have to keep making those users happy and keep iterating your product and improving your product. Otherwise, they'll switch and leave. So it does make it a longer, harder grind, but I think ultimately it should be more profitable and hit higher scale.
What the longer, harder grind for the business,
Yeah.
but not necessarily building the foundation. Like I think what you're saying, to try to make an analogy here, is that once we get the foundation built, we'll be able to put the house up in no time. But we're
Yeah.
in this period right now where we're building the foundation, and that's going to take a ton of work. We're going to need it to last 1,000 years, and we're just at the sort of beginning stages of that. But once we get there, we can build the Tower of Babel in a week, kind of thing.
Yeah. I mean, just to use Nostr as another example, and to be clear here, we're mostly involved in the Bitcoin ecosystem. Primal is our only Nostr investment. Nostr is a much earlier protocol. There's a lot more risk involved in terms of long-term risk of adoption and whatnot, and how robust it is. But Primal does kind of straddle the Bitcoin and Nostr world because it has built-in Bitcoin wallet with Zaps and whatnot, and the monetization strategy is basically selling premium services. But let's use Nostr as another example. Let's say Primal finds a lot of success, Nostr finds a lot of success, and there's like 5 billion Nostr users with no lock-in. Well, there could be a startup in like 7 years, 8 years that like with a 3-man team is able to like scale to like $1 billion worth of revenue in like 4 years.
Yeah, right.
Once we hit the
Yeah,
scale, right? And then you can
yes.
say the similar thing with Bitcoin, because even though Michael Saylor says that there's 100 million Bitcoiners, there's really not 100 million sovereign Bitcoiners. It's magnitudes less. So the problem that Bitcoin startups have is their TAM is inherently limited, right? The amount of Bitcoiners using Bitcoin in self custody and using real Bitcoin itself is a much smaller subset number. So that number needs to grow first. But once that number grows, you could see a random service provider coming in and with very low margin, being able to scale a very, very profitable business very quickly. And the cool part on the Bitcoin side is that anyone who holds the asset, who holds the actual token, is kind of has shared equity there, right? You kind of have, you not only are you all building on the open protocol together, but like if you're an employee of Strike or if you're an employee of Cash App and you're both holding Bitcoin, you both benefit when the other one benefits, all the way down the employee stack, which is absolutely mind bending. And most people don't appreciate it. And it's one of the reasons why um, our portfolio is so complementary, right? Like people ask, like we were the first check into Giga Energy, we're the exclusive investor into Upstream Data. They compete with each other on paper, selling the storage containers for miners, right? And people are like,
That
what about the conflict there? It's like there's actually not much conflict there. They both own a bunch of Bitcoin, and there are miles and miles of oil fields that need storage containers on them. That is just like open season, right? And everyone benefits together.
I mean, I tell everyone I want there to be 100 sovereigns, 1,000
Yeah.
sovereigns. Like there, there needs to be so many of. There's so many businesses that need Bitcoin. To your point, we can't get to all the oil. We can't get to all the
Yeah.
shale. We can't get to all the flared gas. We can't get to all the businesses in Arizona or any businesses in Arizona. It's so the more we can have, and we encourage other people. There's other companies out there doing similar stuff to us, and I have good relationships with the people there. I know them, and it's awesome. It's great to see that, and that was for me one of the biggest changes of going from. There were a lot of big changes, but going from fiat land to Bitcoin land, just seeing everyone working on the same page, working together, everyone has a common goal, everyone's trying to help each other out. And even people that may have overlap in the service they provide, it's everyone's willing to help out, everyone's willing to jump in because exactly like you said, everyone has shared equity in
The
this
coolest thing.
asset. Yeah,
I
it
Very
is.
few people appreciate that. That's like the thing is like,
Yeah.
look, like the person that's running a dentist office and that stacks Bitcoin and Michael Saylor, like they have shared upside, which is or Larry Fink. Like that is crazy.
Yeah. It's so cool. It's just a complete reframing of the way you view things and look at things, and it's it's competition in a good way. It's a healthy competition, a rising tide lifts all boats situation instead of a cantillionaire step on the other guy's throats
Yep.
type of environment. Yeah, it it's awesome. So on one of your recent podcasts, you mentioned something that you said the amount of calls we have to deal with, the amount of investors we have to deal with that are still conflating Bitcoin and crypto, these projects they're pitching to us, they're ridiculous. How far do we have to go on this? Like how bad is it? How ridiculous is it? And are we going to turn this around anytime in the near future. Earlier, you touched on the fact that these crypto guys are just able to deploy so much more capital than us in the Bitcoin space. Like, is there a sunnier horizon anytime soon, or is this just going to be a slow grind into touch the stove, get burned land?
I mean, first of all, it's incredibly frustrating. We have individual investors, like that are just like Bitcoin aligned and want to be involved with building Bitcoin businesses and want to be a part of the network, that write smaller checks. And then we have institutional investors, that write much larger checks, things like university endowments and stuff. And specifically on the larger check size, what's happened is they've already deployed into the crypto funds. And a lot of times it'll come in through like an A16Z or a Pantera or something, an established traditional fund or Sequoia. I mean, all you have to do is look at the FTX cap table, and there's a sunk cost there, right? And there's a career risk there in terms of who the allocators are at these institutions. Um, and they've either gotten wrecked. They had some breakout years where they were dumping shitcoins on retail, where they got crazy returns and immediate liquidity, which is a very easy story to tell. If you don't really care about morals. So they have some numbers behind them that they can point to. But having those calls, first of all, I'm a very straightforward dude. Like, I just tell them I think they made a horrible investment, which usually just kills any chance of them investing in us. But that's just how I roll. Like, I feel like that it's important to be a straight shooter in that regard. And I do think
100%.
I think it'll benefit us in 3 or 4 years when they like realize they're like, oh shit, they were like the only ones who were honest with us, and then they come back, right? And I'm trying to build generational things. Like, I was talking to someone else, like, if OpenSats doesn't exist in 100 years, like, it's a failure. Like, it's supposed to outlive all of us. So I'm willing to wait. Like, we can wait on that front.
Work's not needed anymore. It could have been such a success that you don't need it
I think
anymore.
that work's always going to be needed, but one can hope. One can hope.
Yeah.
Um, I uh, I think that I yeah, it's important to realize that if you look at a lot of the Bitcoin only businesses, I think Strike was founded in 2019. And I think Strike is a good example here. Historically, in terms of larger businesses that have operated in the space, they have been crypto businesses. They've done Bitcoin stuff. It's a relatively new phenomenon where it's like a Solana only business or an Ethereum only business. But historically, it's been Bitcoin plus everything else, right? The Coinbases of the world, the Krakens of the world, the blockchain.com, right? Previously blockchain.info, um, Gemini, right? The large successful businesses have tended to be crypto with Bitcoin. Um, People launching Bitcoin only businesses was a response to what was perceived as the lack of morals and focus and fundamentals out of those businesses. And so those businesses were only founded within the last 6, maybe 7 years. And then the investable capital to focus on them and be aligned with them has only existed for 5 years or so. So we actually just don't have the return profile yet. Like, most people that invest in us are having conversations with us. We're flying out to meet them. We're shaking their hands, and they're making a calculated risk without any performance data. So I think, like, as you see Bitcoin only businesses like a Strike, for instance, hit a 10 billion, 20 billion, $30 billion valuation, then all of a sudden, when we go to these large capital allocators, we can point to those returns and we can point to, look how much more profitable this thing is than Coinbase. Look how much more efficient it is. Look how they're running with 75 employees. They're available in 101 countries, and they're offering a first-class product that's already profitable and growing fast. Then all of a sudden we can start to dig away from them. But I want to be absolutely clear, humans love to gamble. The first use case of Bitcoin that found product market fit was trading shitcoins and trading Bitcoin. And I don't think these things, and you can ship them without permission. So I think in a post Bitcoin world, there will still be shitcoins. I think people will just start to realize that there's Bitcoin and then there's everything else, and we're starting to see the early signs of that.
Yeah, they'll have crypto DraftKings,
Hundred
and
percent.
you'll be able to do your daily crypto lineup and
It was the first
degen out.
the first product that had. I mean, I guess maybe the first product that had fit in Bitcoin was Silk Road or something along those lines.
Online
Um,
poker, yeah,
yeah, online poker was what actually sold me on it. I was like,
same here.
if this thing is just used for online poker in America, then it has product market fit. And then I just dove down the rabbit hole. But specifically, like 100x Bitcoin trading and degen shitcoin stuff without permission has massive fit, and I just don't think that goes away anytime soon.
So funny you say that. I always say that I in 5 years we're gonna have a whole portfolio of testimonials of businesses we're gonna be able to look back on and go, see, these guys adopted
Yep.
Bitcoin 5 years ago. Here's the use case. But now we're like, hey, you like you said, we don't really have a track record. It's kind of you got to trust us. But uh, back to what we were talking about earlier, look at this thing, Bitcoin. Look at its returns.
Yeah.
Now building a business on this basis that does help get some traction there.
I mean,
But
you can even look at Bitcoin, the asset itself, right? Like if you're tech,
that's what I'm talking about. Yeah,
yeah. I
yeah,
mean, but if you're like technically competent, you could have always checked the code and understood why the 21 million cap, for instance, couldn't be changed, right? But for the average person, for the last 10 years, they've been saying, oh, well, Bitcoin doesn't make any sense. Like they're just going to make more of them. And what did they need? They needed time, right? They needed time and reputation to build up before you start to have those kind of assurances. If you can't get your hands dirty and can't verify for yourself, like the only thing that that compensates for that is actually time in the market.
yeah. It's so true. And to actually see these businesses be successful as they've integrated Bitcoin into their business. I was wondering if you had maybe had a couple examples of businesses that aren't necessarily directly, Fold is that's a Bitcoin rewards company. Strike is a Bitcoin exchange and financial services. If I actually don't even know. Do you guys do stuff with businesses where it's, hey, this is more of an ordinary business, but it's kind of like Bitcoin adjacent, and they accept Bitcoin for payments, or is that not part of the fund at all?
I mean, that's technically part of our mandate. And we are seeing early signs of that, specifically um, founders that are running businesses in tangential areas that want to implement a Bitcoin strategy at some point in the future and want our guidance for it and want our help. So, like, we're truly value added capital in that situation. One example is one of our larger investments. People don't, you go on the website, it's like, oh, 35 companies. Um, but there's a very strong distribution there where it's like five companies are, like 70% of the capital deployed. And one of those companies is a company called StatMuse. And they do AI powered sports data. So it's not a Bitcoin business in the traditional sense. But their product lines could very much incorporate Bitcoin and accept Bitcoin and use other elements of Bitcoin throughout their business. And their founder is very intent on that, and he brought us into the cap table for basically value alignment and feedback with that strategy.
Nice. And so do you have any real life examples? Us, for example, at Sovereign, I mean, we definitely extended our runway holding Bitcoin on the balance sheet. There's no doubt about it. It definitely gave us chance to get a bunch more months of getting our feet under us, getting it up to speed. And I'm curious if you have some examples of your own portfolio where you were like, "Holy cow, this business may not have made it." You don't have to give names or anything like that, but uh, businesses where it's like, "Oh boy, if they hadn't incorporated Bitcoin, if they hadn't saved in Bitcoin, this could have been a totally different outcome."
Well, I'll give one general example and one specific example. when SVB was going down, um, and it was threatening to bring other banks down with it, Silicon Valley Bank. Um, we were calling up all our founders. Where do you sit? What are you doing? How do we look? And maybe 90% of them had the majority of their assets in Bitcoin. It's like you'd pick up the phone, you'd be like, where's your treasury at? They're like, oh, we got it in multi-sig. It's like, okay, hang up the phone and call the next guy. Like traditional companies, they were like shuffling dollars all around. Which bank is going to fail? Which bank's not going to fail? Can we make payroll this week? Um, and actually, that's when I started uh, really being more aggressive about Bitcoin treasury strategies to people, both founders in our portfolio and founders outside of our portfolio, where at the very least, you should always have at least 3 months runway in Bitcoin. Like you should never have zero, because what if your bank fails, you're not going to be able to make payroll. So like whether or
For
not you're
sure.
holding it for the ice cube thing, the melting ice cube, you want to hold it for long term. At the very least, you should be holding it for the short term, so that next week and the week after that and the week after that, you can make payroll if God forbid something happens to your bank. So that's the first story, and they ended up bailing it out, and I'm pretty sure USDC would have failed if they didn't bail out SVB, which
Oh,
most people have already
100%.
forgotten. But
Well, you
and it
just
would
got
have
to
brought
get a
that.
big
Yeah, go on.
You just got to get a big VC Silicon Valley guy to complain to the
Yeah,
government
all
that
the all-in
the
guys. The
system's going
all-in
to
guys,
collapse.
go back and
Yeah,
listen to the all-in podcast that week. They were like
yeah,
begging. They were begging for the bailout because their entire
yeah.
portfolio was going to get wiped out. And if
Mhm.
USDC failed, it would have caused a systemic effect throughout the entire shitcoin ecosystem. And it's really unfortunate because I think a lot of retail is going to end up getting burned in the ensuing years. That it could have just been freshly cleaned out, just cleaned out. Like anyone who was overexposed to that kind of existential risk, like shouldn't exist. Like our institutions shouldn't be that vulnerable and that weak. Yeah, go.
Well, it's really just an extension of 08, 09, right?
Yeah,
It's like we had all these businesses, we had all these terrible products that needed to get wiped out. And how much capital have we misallocated in the last 15
yeah.
years because we didn't allow the system to get wiped? And listen, the system would have been a Ponzi scheme. It just wouldn't have been as aggressive and
It's
as bad and so much misallocated capital as we have now. It's just a digital version of that almost.
it's the forest fire metaphor, right? Like if you put out
Yeah.
fires really quickly, you're gonna have a big one. Right? You're going to have one that just goes out of control because forests naturally are supposed to have fires and you're supposed to have new growth and the stronger are supposed to survive. Like that's how nature works. And this is why I believe in free markets. And the unfortunate reality in free markets is some people will get wrecked. You will have to have personal responsibility at the end of the day, and you'll have to protect yourself and your family and your businesses. But ultimately, I think it helps society flourish. And this idea of having like bumpers on pool lanes and shit for our entire economy is a flawed system that eventually will break miserably. And it's fortunate that we have things like Bitcoin that give us a reasonably controlled path outward, so that that chaotic element isn't as bad. But anyway, on to my more specific example.
Yes, sir.
Strike is our largest investment. We're their largest investor. Um, their treasury right now is more money than they've ever raised in their existence. Right? They're profitable, which, by the way, first of all, is insane for a 6-year-old business that's operating in fintech to be profitable and to have more money in their treasury than they've ever raised. Um, but second of all, it does add an interesting not dilemma, but an interesting aspect of us 1031 within the greater venture ecosystem, which is that we don't get markups as often. Um, Strike isn't a markup is basically, another investor comes in and values the business you've already invested in. So you can go to investors and be like, look, we invested at this price and now it's this price. Well, if they're profitable and their treasury is larger than they've ever raised before, they can be very opportunistic about when they raise again and they can delay that. And we're fine with that. But the point is trying to explain this to investors, and almost it turns into like kind of like an artisanal craft in what is the current value. Like no one knows what the current market value of Strike is. We can all underwrite it and make estimates, But we haven't had an outside market participant come in and actually value the thing.
But put a number on. And huge fan of Strike, by the way, is a Chicago Bitcoiner who attends BitDevs. Much love to Strike and Jack and Dylan over there for letting us use their space and what those guys have built. They're incredible. I remember listening to one of Jack's early podcasts talking about Strike and the Lightning Network and talking about how it was going to completely displace Visa. And I remember I was on a plane down to Florida listening to that, and he like just completely blew my mind. I'm like, oh yeah. I'm like, there's no need for these 3% payment networks anymore. Like this is going to completely obsolete all of this stuff. So massive fan. And but along those lines, what you're talking about, they have a significant, I think they disclose they have like 1,500 Bitcoin on their
Yes, that's
balance sheet,
public.
something like that.
Hmm.
Yeah, which is public, right? So how do you as an investor also what's the distribution situation like? Hey, you guys need to make some distributions. How's that conversation? You don't have to talk about
Well,
Strike personally, but theoretically, like, what does that conversation look like? How do we get our quote unquote return on capital
yeah, I mean, I think that's the real question, right?
here?
The the spread between valuation opportunities is fine. I mean, the companies are doing fantastic. If it takes a little bit longer for that to be shown on paper, then so be it, right? But ultimately, at the end of the day, investors want liquidity in some way, right?
Yeah.
Now, there's basically historically there's been two paths for that in tech. The first path is IPO, you go public, and then you get shares, right? And you can either hold those shares or sell those shares. And the second path has been acquisition. Um, in Bitcoin land, I actually think it's kind of a return to value investing, and there's a third path, which is dividends. We have a few businesses that pay us Bitcoin dividends, so they're profitable. They have no intention of going public or getting acquired. They love Bitcoin. They love their business, and the founders pay themselves a dividend, and they pay us a dividend, right? And so that's cool. I love that. The second piece is acquisition. You know, I think every major company is going to need to have a Bitcoin strategy, and so at some point, and it's probably going to be at the top of a bull market, maybe the next bull market, they're going to be in a boardroom and they're going to be like, holy shit, we're caught flat-footed, we don't have a Bitcoin strategy, and they're going to have to decide if they're going to buy or build it. And as we said
Wait,
earlier,
do you mean the next bull market,
I think
like
this one.
4 years from now, or are we in a bull market
Well, you told me that
when we
this
get
is
a real bull market?
you told me this is going to be published in 3 weeks.
Yeah.
So who knows? Right now, today's date is August 26th, and Bitcoin's at $111, and people are feeling very bearish. People think the top is in. Um, I don't make price calls anymore, but I do not think the top is in. I do not think retail's here yet. I think we probably have it like another 12 to 15 months of this cycle, and when we're at the top, it's going to be irrationally exuberant, and we're just not even close to that. So, like, I'm kind of pointing at like December of next year's like where the topish time is going to be. Um,
No, I absolutely agree with you. I was
yeah,
just giving you shit,
no, you're
but
good. But a lot of people,
I yeah, yeah.
it's interesting, right? There's the two majorities in Bitcoin right now, at least in public commentary Bitcoin land in, is either the top is in and we're entering a bear market, or there's going to be a super cycle. There's not many of us that have the nuance position that the cycle is longer this time due to both macro fundamentals and where we are in the adoption cycle. But that there will still be an end to this cycle, and we will still have a 70 to 80% drawdown that wipes out a bunch of degen leverage, and that's where I sit. But anyway, my point is, at the top of either this cycle, next cycle after that, whenever, at a top, these large companies will ask themselves, we need a Bitcoin strategy. Do we buy or build? So they build it in house, or do they acquire talent and a stack? And as I was saying earlier, even though Saylor says there's 100 million Bitcoiners, there's a significant smaller amount that are actually holding Bitcoin themselves and using real Bitcoin. And then second of all, there's a way, way smaller amount that are actually building on Bitcoin and building out these things. So the talent is actually incredibly scarce. So I think a lot of them will choose to, a lot of these large companies will choose to buy. And so that represents acquisition opportunities for a lot of our portfolio companies. And then last but not least, I mean, we've seen a lot of appetite in public markets for Bitcoin opportunities. And the IPO window is definitely very much open right now. And I think it will be open in the future where there'll be demand. I think our founders are not necessarily in a rush to IPO. Some have already, right? Fold went public through a SPAC. So did Grid, and then Grid merged with CleanSpark. So we actually have, I think, probably uh, the only Bitcoin venture fund making real size distributions. And actually, um, regular VC land is getting crushed on lack of distributions. So in contrast to them, we're actually already in a much better place, and I think that actually that trend accelerates, and it's one of the pieces alongside total returns that really starts to differentiate ourselves is the ability to find liquidity and distribute.
I couldn't agree more. I'm definitely of the opinion that everything trends back to value investing, equity investing, and getting actual distributions, actual dividends, because all this stuff we're talking about, going public, looking for deployment of capital. I had a conversation with someone who works for a very big payment processing company, and they have an entire team dedicated to taking their profits and putting it into literal investments. This is
Yep.
a company, an operating company, and they go find other investments to put their money in to get a return just so they don't lose money on their balance sheet. And this is obviously all a function of not being able to hold a hard money, to hold your time and energy into the future. And so as the need for that goes to zero and declines, you're just going to get back to this old school equity investment into businesses, and investments will actually be investments. And really, IPOs, all these investments, these are all just different versions of the short dollar trade, right? These are
Yep.
just different debasement hedges that people are out there trying to figure out. And it will be nice when we can get back to just save your money, invest in a company that's profitable, take distributions on that in an actual hard money. And
I will just
uh,
say there's an interesting aspect about this point in time specifically where regulatory environment is better than it's ever been, uh, where there's a lot of demand for Bitcoin companies in public markets, um, and actually I think risk reward ratio wise, Bitcoin is priced incredibly cheaply right now. Where Well, twofold. First of all, I think a lot of these leveraged Bitcoin equity plays, the MSTR clones or whatever, they're going to need to differentiate themselves somehow. And so I wouldn't be surprised if some of them start going on acquisition sprees of, operating businesses that actually operate
you
in the
almost
Bitcoin
have to.
space. Yeah.
Yeah. Yeah.
The example, there's not based on any insider information, but I just think it's kind of cool because they're both Japanese. But like Metaplanet buying Mempool, for instance, like that would further differentiate themselves from the rest of the pack, and like that just makes sense to me from like an external point of view. But then the second piece is, is you're trying to balance, do if you go public early, you lose control of the business and you get exposed to a lot more regulatory headwinds, right? It's harder to adapt, build out your product. Everything gets more expensive. Your margins decrease, but you get access to a lot more capital, and so you're kind of balancing it in your head. And same when you're raising private capital, you're balancing it in your head between future equity value versus future Bitcoin value, and for better or for worse, a lot of founders are making decisions that are because they have some level of Bitcoin FOMO, right? Like they want the Bitcoin on their balance sheet ASAP. They don't think that they can ever hit those kind of numbers just building out their equity value. And I think that probably changes. Um, I don't. The question is, it's like an S curve. The question is like, how long does that take? Maybe it's 5 years, maybe it's 10 years. But at some point, it becomes much more obvious that we'll see companies just stay private much, much longer, and just be profitable, lean, and stack Bitcoin to their balance sheet rather than going public. But particularly right now in this adoption curve, uh, there's a lot of capital opportunities that are only available to you if you take the public route.
Yeah, I mean, once you look at that Bitcoin log chart over
Yeah.
time, and as that flattens out, yeah, as you get farther and farther along that log part of the curve, yeah, it makes less and less sense to go public. That's absolutely
It's
true.
fascinating.
It it is. There's so Another fascinating thing about the Bitcoin space is there's all these hypotheticals, and like what you just talked about, where you were like, well, I think we're gonna have this extended cycle, and then we're gonna all the degening's gonna show up, and it's like, well, there's no more drawdowns. It's like, well, if there's no more drawdowns, then we didn't have a huge run up,
Yeah.
and if we have a huge run up, then we're gonna have a huge shutdown, and like really none of us know. I mean, that's just one example. It's just we could go this way, we could go that way. It's just an endless fork right, fork left, fork right, fork left, down all these paths of how
Well,
things could turn out, and
I
none
mean,
of us
and then
think
you
anything
can
good.
imagine how difficult it becomes trying to underwrite these businesses.
Of course,
And like projections are already, a bit more of an art form than a science. But when you're trying to like plot the growth of a business, even in 6 months or 12 months, it's like, okay, well, what if Bitcoin doubles? What if Bitcoin
yeah,
halves? And the coolest
yeah,
Bitcoin businesses, by the way, are the ones that it doesn't matter in which direction Bitcoin goes. At least in the short term, I think every Bitcoin business is fucked if we just go steady down and into zero eventually, or like trend
yeah.
to
If the
zero
Bitcoin
eventually. Then they're screwed.
demonetizes us, we're in trouble.
Yeah,
Yeah,
but the
yeah,
cool businesses are the ones that it doesn't really matter as much. But still, even for those, it does because new user growth comes in with mostly volatility, but very much when it goes up. But if it's flat, we get like almost no user growth. If it's going down with volatility, we tend to get some user growth, and then if it goes up with volatility, we get the most growth. The flat chop is where everyone just gets mad at each other on Twitter, and then there's no new growth.
I haven't noticed that. People get so many people who get so antsy. And it's just, and it's I got people that reach out and we've been stuck at 110,000 for like 3 months. I'm like,
Yeah,
dude, you bought it 22K. What are you talking about? You you waited 3 years for this. Like, just chop around for a few months, bro.
yeah,
Um,
enjoy it.
yeah, I know. I know. All right, Matt. Well, I could talk to you forever. We're coming up a little over an hour here. I got one last question for you though. And so you do your podcast with Marty, the Rabbit Hole Recap. We got Marty Jones on there. He's the resident tinfoil hat guy. But I know I hear you talk all the time about the wireless headphones, eating meat, cutting out carbs and seed oils. So I'm curious if you're willing to share what's one rabbit hole you've really gone down that's piqued your interest that you really haven't talked about much on any of your pods.
Um, I will say that. Uh, I mean, I think I think to be provocative, or not even to be provocative, but probably one of my more provocative, strongly held beliefs is that in America we do way too much male circumcision, and then the fact that it's by default, um, almost by default. I mean, if you have a hospital birth, it's by default. I think it's incredibly fucked up. I just feel bad talking about it because once you make that decision, it's like you can't really go back on it. You already cut your son, then it is what it is. Um, and I try and quote unquote stay in my lane on that front. But I think that's a big one. I think, childhood stuff in general, and maybe it's top of mind because I have a young family now, young growing family. And it's incredibly important to me. But like social media, screens, vaccines, male circumcision, public schooling, I have a lot of strongly held out of the norm beliefs on those fronts. Um, that are very, fundamental to how we're building out our family.
I just had a son 6 months ago. You can see his crib in the back there, and we've had to deal with all those issues. And I'm certainly simpatico with you on all of that. And having a wife that is also simpatico and supports you through that stuff. I mean, I'm not sure what I would do with a wife that was opposed to me on that stuff. So shout out, and I know your wife is very supportive of
Oh
you as
yeah,
well. So
100%. Single most important decision you can make in your life.
easily marry a good woman who is aligned with you and your values. And I mean, that's Marty recently had Zuby on his podcast, and he was talking about I think it was like the 10 things for a successful life or whatever. And the one that really stood out to me was don't make the big mistake. And like if you can avoid that catastrophic mistake, your life will turn out so much differently. And marrying the wrong woman is that's a catastrophic
Yeah, it's
mistake.
fundamental.
Yes, it
It's
is.
a true
It
ride or
is.
die, right? It's like it is what
Absolutely. Yeah.
probably one of the most, if not the most important decision a young man makes. And I would just,
Yeah.
I, I probably publicly the one. I mean, I think everyone knows I struggle with the most is the social media side, because I think it's really bad. I think like uh, you know, your child growing up and being 12 years old or 13 years old and sees like your father or your mother is a quote unquote influencer adjacent, is like a porn star. Like I just don't. And it's
I think
crazy how many people like that's their main goal in life. Their main goal in life is to have large online audiences and be part of that. And that's a hard topic to have, no one wants to hear it. It's I feel bad to kind of talking about it. But
even just
something
even
I
just
struggle
your
with.
kids seeing you constantly buried in your phone instead of like paying
It's so
attention to
bad.
them. I mean, yeah, it's awful.
Yeah.
It's
The
it
screens is bad. I think it's bad for
yeah.
adults too, but particularly bad for kids. And I think this like the modern social media experience is part of the reason why we've taken an increased risk on Primal. Um, is because like I also think it's one of those things like complaining about A16Z doesn't really do anything. Um, complaining you have to outcompete them. I think complaining about X on X or complaining about Facebook on Facebook or complaining about LinkedIn on LinkedIn doesn't really get you anywhere. The way we actually might make some progress is by having, more user forward, user healthy alternatives. But it's very much it's a harder path. And I don't know how active you are on Nostr, but it's kind of hilarious that it's basically a network bootstrapped by people who hate social media to a degree, which is a fascinating phenomenon, and questionable if those types of people can actually bootstrap a social environment if they hate it so much. But we'll see.
I mean, 100%. It's I think I have like 3,000 followers or something on Nostr, and my wife's like, "You're already an influencer on there, and you hate social media." I'm like, one, I'm not an influencer. Two, I do hate social media. It's funny you say that. We had a there were like five of us at Sovereign who were like, "Who's going to do the social media?" It's like, "You do it." No, you do it. No, no one wants to do it. We all hate it, and we're like, someone's got to do it. And honestly, we've been fortunate. We've had the help of a young gentleman who's going to work for Blockstream at the end of this month. So now we're going to be relegated back to the Spider-Man meme of who's doing our
You
social
gotta go.
media. So
Gotta do your time.
yeah, yeah. All right, Matt. Well, thank you so much for joining me. If people want to check you out, best place just Odell on Master, 1031. What's the website there?
It's Odell.xyz has all my links and 1031.xyz.
Perfect. And uh, we have a couple events coming up. We're helping out with the Bitcoin in DC event at the end of September from September 30th to 10/1. If you want to go to BTC, btcndc.com, promo code Sovereign. That one is actually with the first E. You can get 10% off your registration. We're also participating, and I'm going to be speaking on one of the panels out at the Denver Space, the Bitcoin for Financial Services conference out there from October 16th to October 18th. And you can go sign up for that one. And our promo code is Sovereign without the first E. So we got some name branding stuff we got to
You got
work
to
on
work on
here.
that one.
But yeah, try. We do. It definitely requires some work. Maybe some changes coming. We'll see. But Matt, thank you so much for your time today. Appreciated all your insight, and we'll talk to you soon.
Thank you for having me, sir.